The Spin-off Podcast Network.
Does your brand have something important to say through meaningful messaging that reaches the right audience? At The Spin-off, we work closely with our partners to create bespoke campaigns that bring value to both your brand and our audience. If you're interested in learning more about partnering with us, email Beck, that's BEC, at thespinoff.co.nz.
Kia ora, I'm Duncan Grieve, founder of The Spin-off. You can help us keep all of The Spin-off's award-winning journalism free for everybody by becoming a member today at thespinoff.co.nz/donate.
When the Facts Change is brought to you by the Spin-off Podcast Network in partnership with KiwiBank, the bank for Kiwi looking to get ahead in business and in life. A bank that delivers expertise and banking know-how, smart advice for business owners wanting to invest, grow their business or diversify. A bank that adapts with technology through the lens of its people and customers. It is a bank with heart that is driven by its purpose. Kiwi making Kiwi better off. So what is a fair level of tax? And no, the answer is not always the lower one. Because ultimately, the fair level of tax is the one that keeps us all healthy and happy and keeps the economy doing its thing to provide what we need. And it's increasingly a problem in Aotearoa. We have a government, and to be fair, previous other flavours of government, which have dedicated themselves totally to reducing the size of government to 30% of GDP or lower, of regularly running, if not deficits, then at least balanced budgets, and of keeping net debt very low, close to 20 to 30% of GDP. And it's just assumed that that's the natural and right thing. And it's meant that it's been very difficult to reform our taxation system, which on the whole is a beautiful, perfect thing, broad-based, low rate, and now with the most incredible machine hoovering up, or maybe it should be Dysoning up all of the cash in the economy that comes out of PAYE and then it goes through tills as GST. But that Dyson does not touch wealth, and that is unusual. This week on When the Facts Change, we talked to Professor Lisa Marriott, a professor of taxation at Victoria University of Wellington, who will be speaking at the Poverty by Design conference that is coming up later this month in Wellington, hosted by the Stout Centre at the Victoria University, in which we look at what is a fair tax rate. Is our current system fair? And what sort of distortions is it producing in not just our economy, but in our society? Because you might be surprised at the levels of unfairness and how we just seem to ride on past it, just not even a glance. For example, the richest New Zealanders, we now know, pay a third of the tax rate of the main middle classes in New Zealand. And that's because, of course, we don't tax income from capital or wealth, unlike in every other country in the world. So that's the richest pay tax at a third of the rate of just everyday New Zealanders. When I say everyday, the median household. And then, of course, there are the ways that those with means and with wealth and with income don't necessarily get the same treatment from the arms of the state as those people who don't have the income. We've heard in previous When the Facts Change about the vindictive and punitive approach taken by MSD and by WINS when it comes to handing out food grants and helping people with accommodation allowances. But just to give you a sense, there is currently tax debts owed to the Inland Revenue Department of almost $8 billion. And most years, almost $1 billion of it is forgiven. However, MSD has billions of dollars of debt owed to it by beneficiaries, which they are regularly chasing up and refusing to forgive. Then you've got, of course, the issues around white-collar crime versus your regular type of crime, in which sentences and punishments for white-collar crime are routinely, when you compare them like with like, much, much lower. We don't have a fair tax system. We don't have a fair society. Our government is way too small to have a healthy society, let alone a fast-growing and functional and coherent one. These are the issues that we talk about here on When the Facts Change. The political economy of tax. This week with Professor Lisa Marriott. Enjoy. Well, kia ora, and welcome to When the Facts Change to Professor Lisa Marriott, who is a Professor of Taxation at the Victoria University of Wellington. Welcome into When the Facts Change, Lisa.
Kia ora, it's lovely to be here.
Now, I'm looking forward to attending a conference that you're also speaking at in a few days' time in Wellington, which is organised by the Stout Centre for Research. This is all about poverty. Poverty by Design is the name of the conference, and the section that you're going to be speaking in is the economics of poverty, and particularly looking at tax and our tax system. First up, is our tax system fair?
Such a good question. No, it's not. It's not. And I think there are so many reasons why it's not fair. And I guess the most obvious one is what's not taxed. So look, let's just start there because that's what everybody's probably expecting. So there are three ways of taxing, really three main ways. We can tax income, and we do that really well in New Zealand. We can tax consumption, which is goods and services, and again, we do that extremely well. And then the third one is wealth, and we don't comprehensively tax wealth in any way. And by in any way, I mean capital gains tax, wealth tax, inheritance tax, estate tax, gift tax, land tax, you name it. There's nothing that systematically taxes people's gains and wealth. And the problem with that is our wealth inequality is vastly worse than our income inequality. So our income inequality, so the difference between sort of incomes at the top maybe quintile and the bottom quintile is actually only around about 5 times. But our wealth inequality is something like about 180 or 190. So you've got these enormous differentials in wealth between those who have the most and those who have the least. And it's not being taxed, which means that it's just allowed to grow and increase. And the wealthy get wealthier, and we're not seeing that distribution. So that's one component that I don't think is especially fair. I said we tax income really well, and I think we do. We don't do a bad job of taxing that in New Zealand. But again, I think there are some things that we could maybe talk about to see if there are maybe ways that we could do that better. So, for example, I would look to our neighbours across the sea, and in Australia, they have a tax-free threshold at the bottom. So there's no tax on your first $18,200 that you earn in Australia. But then when you get to the other end, so over $190,000, you're paying tax at a higher rate. So that's 45%, whereas in New Zealand, it's 39% at $180,000. So you've just got a much broader sort of spread there from what's happening at the bottom to those at the top. And we hear so much in New Zealand about the middle and how overtaxed the middle are. And this is why. It's because actually we spend far too much time taxing the people in the middle and actually probably not enough at the top. Now, I should say I am ignoring working for families tax credits. That does help those who are the lowest income earners. But again, our reliance on those transfers back to people it's getting pretty enormous these days. So I do think we could be looking at our income tax system as well to see if there are ways that we could perhaps make that fairer based on people's ability to pay.
Just to put this into the context of how unusual this is versus the rest of the world, we've sort of it's now seeped into our bones that capital gains are not taxed. There is no inheritance tax. We don't tax wealth. And that's just the way it is. This is just normal. But for those who maybe have bumped into an international visitor and just mentioned in passing that there is no capital gains tax in here, and then they fall on the floor, could you give us a sense of how different we really are?
Yeah, I know we really are. We're outliers amongst the OECD, and from time to time you might see a sort of a headline that says, "Oh, I know, only 3 other countries have a wealth tax," or whatever it is. But there are various different forms of taxing wealth. It doesn't have to be a wealth tax, and a lot of countries have more than one way of taxing wealth, and they might also be taxing your income at 45 or 50% as well. So we're not a high tax country, and I think where you see that reflected, to sort of go back to the theme of this conference, is in our poverty, and we're not performing well with poverty when we compare ourselves to countries that we would like to be able to compare ourselves with. And certainly the tax system is one of the tools that we can be looking to try to address that, because it is the main way that the government raises revenue.
And what are the options there, let's say, to start with, for taxing wealth before we talk about income?
Yeah, so there's actually lots of different options. That you can tax land, for example. So and again, there's lots of different policy design elements to this. So you can have a tax where any gains on a particular type of, if we're talking about land, the gain on that land is taxed when it's sold. That's one option. Or you can have a sort of more like a wealth tax option, where you have a relatively small amount of tax on that land that is paid on an annual basis along the sort of the rates type of model, whereas a capital gain tends to be on disposal. So a capital gain where it was just on land would be where that piece of land was sold, and at the time of sale the gain was taxed. So I quite like the idea of just having a land tax, which could either be a wealth tax on land or a capital gains tax on land, because there's a certain amount of simplicity associated with it. You can't hide your land. You can carve out, if you don't want perhaps productive land to be included, or Maori land, for example, there's good reasons why you might want to exclude that. So it's sort of a nice clean way of taxing. But that's one option. You can go down the wealth tax route, which is where the Green Party have been advocating for a wee while now. So you normally have a certain amount of wealth that either an individual or a household can accumulate, and once you have wealth beyond that, then you pay a quite a small percentage, so maybe perhaps 0.5% a year on the value of that wealth above a certain amount, and that amount can be set fairly high if you want it to be, or lower, depending upon what the wealth distribution is looking like. You have a capital gains tax option, which is when assets, a broader category of assets, are sold. So that can be land, but it can also be things like shares or other property that increases in value, artworks and so on. And again, these instruments, they're quite flexible. So even if you had a capital gains tax, generally your individual owner-occupied home is not included in that, because it's actually really important that people have their own home. There's good policy reasons why we might want to encourage that, particularly as people age. So they are quite flexible instruments. And then you've got the real wealth tax, which is on estates or inheritances. So they're similar. It's just a case of who's actually doing the paying, if it's the estate or the person inheriting those items when somebody passes away. But the idea with having an estate or an inheritance tax is you're taxing at the point of redistribution. So at the moment, what we have is we have wealth accumulating within sort of family groups. It's never taxed, and you just end up with this increasing inequality with groups of wealthier households becoming wealthier. So the idea with that inheritance or estate tax is that it's an opportunity to engage in a bit more redistribution at that point.
So that's wealth. The other area is income, and also the idea that you could help a certain section of society more by changing consumption taxes. So one of the last major reforms of our tax system involved a big tax switch where income taxes were reduced and GST was increased. And in theory, it was argued at the time, this was distributionally neutral because it happened at the same time as some changes to working for families. There's no suggestion in the latest tax cuts for on both income and on rental property owners that it's distributionally neutral. In fact, it's very much not distributionally neutral by my analysis of the figures. More than 60% of the tax in dollar terms, tax reductions go to the 40%, the wealthiest 40% of the population. But is there a way that you could change the income tax system and the GST system to essentially do a similar thing in terms of redistributing income after spending?
Yeah, so to your point, I completely agree with you with that tax switch. I think if you, which the government did at the time, if you select some very unique cases, you can put forward some arguments that people are better off, but you didn't need to scratch much beyond the surface to see that actually the people who are going to be worse off were the lower income people who have to spend all their salary, and a large proportion of that would be subject to GST, so apart from residential rents. So, and also just to pick up on your point about, you said you've done your analysis with those tax cuts and where it sits. I also did just a very rough calculation as to where some of those gains sat, and I calculated that your average tax relief per landlord was $24,000 and your average tax relief per worker was about $2,700. So again, there's
not a lot of pretense.
Yeah, exactly. But as I say, those are my calculations. That was not what was being presented to us.
No, they sound about right. I've done similar sort of calculations myself. So that's on the GST and income tax side. So now we know from the research that came out of IRD under then Revenue Minister David Parker what is actually happening, because it was one of the strange things up until 2022, 2023. We didn't actually really know what the wealth or the income was, particularly of those who were the wealthiest. We now have a much better understanding. So it's very clear that those people who are the wealthiest are paying lower tax on average than those in the middle of the income and wealth spectrums, much, much lower tax. And if they were to pay the same percentage of their incomes in tax, there would be a much larger amount of money for the government to spend. So we know it's unfair. Why haven't we changed it? What's going on here?
Yeah, it's such a good question. And it's one that I really wish I had an answer to, because I feel like if there was an answer to this question, then we could possibly tackle it. As you know, there's just not the political will to do anything about this, and I don't understand why. We keep seeing survey results that show that the population appears to not be resistant to some sort of capital gains tax or wealth tax. Part of that, I think, is at least advances in education. People are understanding a lot more about what these taxes mean. And I do recall when this came in under John Key's government and his framing of it, of why he wasn't even considering a capital gains tax was because, if we have a capital gains tax, that means that your individual home has to be part of that. And I don't think that's fair, so I'm not going to do that, which of course is nonsense. But that's what people here. And I feel like, we do need to have reasonably sophisticated discussions about this. And I feel like they actually have got a lot better. There's a lot more, the media are actually really good with engaging with these topics at a really sensible level. And the Inland Revenue Report, as you say, that came out showing that the most wealthy amongst us are paying tax at 9.5%, which is less than the lowest tax rate that very lowest income earners pay. Those sorts of messages are really clear, and I would like to think that eventually there will be enough people who will understand and agitate and advocate for change. We live in hope.
And one of the really interesting things about various debates about tax reform is that politicians often like to pitch any reform as a neutral one, i.e. it's not going to increase the size of government, it's just going to change the way the money comes in, and that somehow is going to unlock some sort of potential growth or benefits for people. And in theory, you could do that. You could have a redistribution which leaves the size of government no larger. It just means that more money has come from some people than from others, and you've essentially redistributed the pie. The size of the pie that goes to the government hasn't changed. But could we actually continue to have a government which was broadly around 30% of GDP, and both parties in recent years have committed themselves to getting the size of government either at or keeping it below 30% of GDP. It's the driving force in the current government's fiscal strategy. So could we actually do that? Because there are some underlying forces in our economy: an ageing population, changing costs of healthcare, it seems falling productivity. Can we actually continue to have the promises that we have around hospitals, schools, New Zealand superannuation and the likes with a government that's at or below 30% of GDP?
So, my answer to that would be no, but also, why would we want to? I feel like setting artificial constraints on expenditure is exactly that. It's setting artificial constraints that there's not really any good argument for. We could look to any of the high-tax countries. In fact, I'm going to list some of them out to you now because I've just got them on my other screen here. So Japan, Denmark, France, Austria, Canada, Portugal, Belgium, Sweden, Finland, they all have a top personal income tax rate of more than 50%, and they also all tax wealth as well. But they're all pretty, for the most part, decent places to live that have much better performance on poverty than we do. So
and productivity and per capita GDP and those sorts of things.
Yeah. So it's all about choices. And if we want to set those artificial limitations, well, that's a choice. But there is some significant trade-offs that sit alongside that. And unfortunately, those trade-offs impact on those amongst us who have the least.
And it's not just the size of government as a proportion of GDP it produced every year. As with any company or household, you've got money coming in and money going out, but then you have some assets and maybe some liabilities which will move around over time. And one of the other limits that governments of both flavours have put in over the last 20 or 30 years is that the size of government debt, whether it's gross or net, depending on the time of the year, that it should always be below around 30% of GDP, that this somehow is an optimal level for Aotearoa to not have debt much above that 30% level. And that has some real implications for what we do with our budget surpluses or deficits, and also the size of government and how much we invest in our public infrastructure. So what about this idea that, you need to run your tax system also to keep debt below 30% of GDP?
Oh, yeah, running our tax system like a household. Of course, there's a cost associated with borrowing. But to the extent that borrowing is used to get a good return, and there is a good return on that borrowing, then there's no reason why we shouldn't be borrowing. It's only if we're borrowing and not making good investment choices that I would think that perhaps that wouldn't be a good idea. The artificial constraints around these numbers, I just don't know. We seem, as you said earlier, we seem to have settled on these measures, and it's the narrative, it's the underlying understood base from where we start. And I don't know why that is. And actually, it would be really good to have a conversation around how this could be different and how better off the country could be if we were to move from those.
Particularly when most of those other countries you mentioned, the ones with higher tax rates, also usually have much higher debt.
They do, yeah,
Japan
that's right.
And the United States, both over 100% of GDP. In fact, Japan over 200% of GDP, yet a much wealthier place and actually growing in per capita real terms, its GDP. Lisa Marriott, a Professor of Taxation at the University of Victoria in Wellington, thank you so much for coming on to When the Facts Change to talk about the things we just love on this program, tax, the political economy of tax. Thank you.
Kia ora, Bernard. Thank you very much.
When the Facts Change was brought to you by the Spin-Off Podcast Network, together with KiwiBank. Visit kiwibank.co.nz to find out how KiwiBank are making Kiwi better off.
Are you curious about how business can be better? I'm Simon Pound, and I host Business is Boring, a podcast where I kōrero with some of the most interesting people in entrepreneurship, commerce, and making things happen. Tune in to Business is Boring every Tuesday, brought to you by the Spin-Off Podcast Network in partnership with Spark Business Lab.
Kia ora, I'm Alex Casey, Senior Writer at The Spin-Off. We wouldn't exist without the ongoing support of our generous members. If you're able to, you can make a donation at thespinoff.co.nz/donate.
The Spin-Off Podcast Network.